All right, everyone, this is going to be a very quick video, quick trade demonstrating the Sonic system using the E-mini S&P. I just did a video outlining the crude oil, the NASDAQ, the E-mini, the Bitcoin. Now I see here in the E-mini a great opportunity. I just clicked record. I want to show you this trade. I'm going to take it live. It's a long trade, and it's a long trade.
Order filled.
You can see that this is on the micro E-mini S&P. You can do the same thing on the ES. So I like to trade the ES. A lot of traders like to trade the MNQ and the MES, the micro. MNQ is the NASDAQ. And I have here the distance from my target and my stop about 50%. I think that's a really good risk-reward ratio. I also think that if you're able to get a better price, go for it. And I'm also trading this on the ES. I can show you here. Excuse me. So I took the same trade here on the ES, and I'll make the profit target, and I'll adjust the stop here. So it's really the same trade on the micro E-mini and on the E-mini S&P. Same exact trade. So I want to show you the diversity of the Sonic system.
Filled.
And that's it. That's the target. I'm going to switch back now to the, because I have this in multiple charts, so I can see it, but I'm just recording this one window. You can see here now when I switch back to the micro E-mini S&P, you see it hit the target on the E-mini S&P, but not yet on the E-mini. Now, if I change this here and I say I'm going to put a sell here,
order submitted,
market of touch, and I'm going to put here also a stop. You can do this using the chart trader. A stop, a sell stop here.
Order submitted.
This is considered my stop on the micro E-mini, and this is my target. So you can see that we can absolutely adjust the targets and the stops as we're trading. Something I also think is important, that if this is taking a little bit longer, or if it's really hanging out below where I entered for a few minutes, that to me is telling me that it's not going in my favor. I entered for a reason. I want to see an immediate result in my favor. So to me, the longer you hold on to a position that's not going in your favor, we should cut it off sooner rather than later. A lot of traders fail, and I don't want to say fail in a negative way. I just say fail because they hold on to a losing position, or they move their stops unnecessarily. It's okay to take a stop. There's nothing wrong with it. It's okay to get out of a trade at break even or a small loss. Absolutely. There's nothing wrong with that. It's just holding on to these losing positions unnecessarily, where they just get worse and worse. This is where we have to stop. Now, if I wanted to close out this position, you could, with this limit order, move this or move the stop. I prefer to move the limit order because it avoids slippage. This is an MIT market if touched. So market if touched does give you slippage. It's market if touched converts into a market. So I don't want to lose any money on this trade.
Order filled.
Want to learn more? Visit DayTradeToWin.com and get started with a free member account, which includes access to our trials, including the ABC software. Start learning the right way by using price action and avoid using conventional indicators. We offer unique strategies and proprietary software, including the Sonic system. Join Accelerated Mentorship and get instant access to all our software. Let's get you set up in the next training.